Hi there, good afternoon. You've tuned into ET now, and this is Market Fatafat with me, Cheryl D'Souza. Along with me, I have Vinny Motiwala. Very good afternoon to you, Vinny. And if you look at the markets, it's having a great afternoon. I didn't want to say good afternoon today as well, because on Friday, remember that we started the June series on a very firm footing, and that journey just continues today as well, with the Nifty Bank hitting a fresh record high in today's trading session. Look at the way how Nifty is also trading above the 18,600 mark. I beg your pardon, sorry, it is 18,600 is where the Nifty is. Upwards of that is where the Nifty is trading at this point in time. Let's take a look at what the broader markets are doing, the small cap as well as the mid cap index. Remember, the mid cap index had already hit a record high levels, continue to sustain that momentum, and you have the broader markets moving almost in tandem with the benchmark indices. Advanced decline ratio for now is tilted towards the favor of advances. Talking about the sectoral moves, then all the sectoral indices are in the positive territory, barring the IT index, which is seeing mild bit of decline since the word go, if you look at it. So 0.3% downtick coming in for IT index, but metal index, PSU Bank, Realty, all of them are seeing really good strength in today's trading session. A lot of stocks to discuss in the next 1 hour, isn't it?
Absolutely. And on that note, let's just get started with all those stocks that are buzzing in trade, either on the back of news flows, earnings, or on the back of technicals as well. On the technicals, this afternoon we have Sameet Chavan joining in with us, while from the research team we have Ashesha as well as Harsh joining in with us. A very good afternoon to all three of y'all. And for the first stock, I'm going to be starting with the first stock for today, that is Sun Pharma. Now, we're picking this one up. Why? Because Taro Pharma has said over the weekend that Sun Pharma has made a buyout offer for the company, and this is at a price of around $38 per share. Sun Pharma intends to acquire all Taro shares in a cash deal, and the purchase price which was there, that $38 per share, that's around a 31% premium compared to the closing price on May 25th. This is a non-binding indication of interest which is seen, and post-acquisition, Taro Pharma is to become an arm of Sun Pharma, and that means that the company will actually get delisted from the New York Stock Exchange. Now, Sun Pharma as of now has a controlling stake in Taro Pharma that has 72% stake in the company. Valuations are expected to be around those $401 million, that is around 3,300 crore rupees for the remaining stake. So on the back of this, we've seen Sun Pharma was in focus. As of now, it is seeing gains. It's seen a decline of 0.3% in trade. Now, Sun Pharma obviously is committed to increase stake in Taro. That's the word that is coming in from the CFO of the company, that is Madhurali Dharan. And what more is he saying about this? What is the US market looking like as well? Let's go across and listen into what he had to say.
There have been some buybacks done even earlier in the last couple of years. And now we thought that overall this transaction is quite compelling and will benefit both the organizations. And that's why we have submitted our indicative offer to the Taro board. So at this point of time, Taro has not given any specific guidance as such and continues to be a public company. So we will be unable to offer any comment on the future performance of Taro. So we have guided for a 78% of R&D for FY24. We have been focusing on bringing in efficiency and containment of costs across businesses and other value chains, which has enabled us to sustain and probably look at a margin of 25-26%. Even with the increased guidance of R&D at this point of time, while we are not guiding specifically on any EBITDA margins for FY24, but we will work towards maintaining and sustaining these type of margins.
All right, so that was the CFO of Sun Pharma, CS Muralidharan. But let's move on and let's talk about Inox Wind. And if you look at that particular counter, at one point in time, it was perched at a 6-month high, and this after the Q4 loss has narrowed. So the stock saw an uptick of about 8%. Right now, it's seeing an uptick of about 12%. The stock is trading highest since December. The company has reported a narrow year-on-year loss in the quarter gone by. This is on back of a 41% jump in their revenue from operations as well. So that's one of the reasons why, rather the main reason why Inox Wind is soaring in trade today, 12% uptick, and the fact that the loss has narrowed, the revenue has seen a jump of 41% in the quarter gone by.
Let's move on to the next stock. And Harsh, Avalon Tech is also a stock in focus today. Why is that so?
Vinny, what we're seeing is a surge in shares on the back of a solid set of numbers. What we're seeing in terms of revenue, it's up 30% on year-on-year basis. Even when I'm looking at it sequentially, up 17% sequentially. So definitely a positive there. We're looking though at an EBITDA which has gone, or rather doubled up when I'm looking at it sequentially, gone up 73% year-on-year. So sequentially, that pressure of costs seems to have come off quite sharply, and therefore what we're seeing sequentially is margins have improved quite sharply. From that 8.7% mark, margins have gone up to 15% on a sequential basis. Now, in terms of comparison, check the box, year-on-year margins in Q4 of FY22 were at around 11.5%. Currently at 15%. So that expansion seems to be quite healthy, even on a year-on-year basis as well as sequentially. So a solid number there. And profit after tax doing very well, really more than doubling in terms of the number year-on-year. Profit after tax coming in at 22.5 crore versus that 10.5 crore number same time last year, up 112% on a year-on-year basis, and essentially going 4x on a sequential basis as well. So a solid set of numbers. Stock was up much more than the current 2% it's actually up by.
All right, moving on then, let's talk about Hero MotoCorp and Sameet. How is this one looking on the charts to you?
See, the recent rally is clearly, propelled by the BFSI space, and the, after that, auto is the one space, that has clearly driven this recent rally in the market. If you look at the overall performance of Hero Moto in last couple of years, it has done nothing. It has been consolidating. But, of late, in last couple of months, stock has rallied from the levels of 2250, 2300, and there has been no stopping. Last 2 to 3 weeks of consolidation, the stock has confirmed a breakout today itself from the hurdle of 2760, and from here on, will not be surprised to see the stock even heading towards 2850 and even probably towards 2900. So overall the chart structure looks quite promising, and importantly, in the recent rally the volumes have picked up substantially, so that clearly indicate that there's a strong buying interest in this particular counter. So we expect the stock to do well. 2850, 2900, as I said, these are the next levels to watch out for. And on the low side now, previous resistance of 2750 would act as a very strong support.
Out on those levels for Hero Moto, 2900, around those levels is what we could be seeing. Let's move on to the next one, and City Union Bank, Ashesha, is too in focus on the back of its numbers.
Yes, it is in focus on the back of its results, and the stock is tanking in trade today. The numbers were well below what the street was working with. It in fact missed estimates by as much as 12%, and this was on account of lower net interest income led by lower net interest margins that the company reported in the fourth quarter. As far as FY24 guidance is concerned, management said that loan growth could be in the range of 12 to 15% in FY24, and most of it could be skewed in the second half of FY24. As far as net interest margins are concerned, they came in at 3.52% in the quarter gone by, mainly due to lower yields. Provisions were also higher, much more than what the street was working with, and yields for private sector banks rose by about 100 basis points on a year-on-year basis in the fourth quarter, but this particular bank for City Union Bank, it has declined by about 130 basis points owing to competitive industry and higher slippages. So on the back of weak set of results that the company has reported, the stock is declining in trade today. As I mentioned, it is tanking in trade, nearly 9% lower in trade as we speak.
All right, that is City Union Bank tanking 9% in today's trading session. But let's actually hear it from N. Kamakuri of City Union Bank, and what kind of impacted the performance in the quarter gone by, and where do they see the road ahead for the bank going ahead. Listen in.
See, basically, if you had a chance to look into at the year beginning last year, we were not very robust about the growth. But in between, we felt we can increase our growth rate, and we were expecting things to improve. But we had some issues in between. Particularly, we had to strengthen our internal processes and systems. And in fact, we were balancing our growth between the both gold loan and also from the MSME loans. So all the issues are on the, they were there on the public domain. So we had to take some extra care before we actually press the growth button. In fact, we, took our legs off the growth pedal even before the COVID, somewhere in the, last quarter of the calendar year like say 2019, just even before the arrival of the COVID. So the in fact we used to have an approval rating of about approval our approval to new customers almost came down by 50% because of that decision, which we decided to increase once again last year, which we couldn't do. But we hope this year we should be able to compensate for all such things. Nevertheless, we were able to protect our profitability. In fact, we could see the our unwinding of NPAs and recoveries and all had substantially improved. The NPA addition minus collection almost increased by about 250 crore in the financial year 23 compared to financial year 22. Despite having all other
Let's move on and talk about a pharma name on the charts. And Sameet, you picked out Lupin for us. Today, surely seeing a run-up. Last 1 month, also decent gains is what we've seen coming in. So at the current price, would it still be an attractive buy?
Yes, definitely. Because, this stock has, with today's price, this stock has now come out of its 15 months of consolidation phase. And if you look at the volumes, it has risen substantially. So that clearly provides some sort of, credence to the move. As far as levels are concerned, from here on, we don't see any major resistance before 860, 870. So since stock has already broken out from its long slumber phase, we expect this momentum to continue. 850 is the immediate level to watch out for, but will not be surprised to see the stock even surpassing 850 and heading towards 900 in probably next 3 to 4 weeks. So overall, the bias remains positive. Any decline from current level would be a good buying opportunity. And as far as now supports are concerned, 780 to 770 seems to be a very strong support. So any depth from current level is likely to get bought into, and sooner or later we expect this stock reaching 850 first and then probably moving towards 900.
Okay, that's the word coming in on Lupin. But let's move on and talk about Archean Chemicals. This one is in focus on the back of its numbers as well. We're comparing the numbers on a quarter-on-quarter basis because there's a lot of change that comes in chemical prices and the raw materials over there. So yes, revenue seeing a growth of almost 5% coming in. 382 crores is what the revenue stood at. Net profits a 40% jump on a quarter-on-quarter basis. While in terms of the operating performance, also a strong operating performance coming in from the company. EBITDA up by 21% and margins a strong expansion of almost around 600 to 700 basis point. EBITDA margins at 50.5%. Now, obviously, what is supporting it is the lower finance costs as well as the RM costs also, which have been reduced. Lower RM costs is something that is leading to a support in terms of the margins as well as the bottom line of the company. And that is why we're just seeing that the stock is buzzing in trade, up 2% in trade.
All right, moving on, let's talk about Phenol-X cable, and this particular counter has fallen in excess of 5% in today's trading session, taking the stock to the lowest level in about 2 months. And this after the company said that the quarterly profit contracted by about 22%, which is hurt by higher material costs. Equirus Securities has come out with their note where they've cut the recommendation on the stock to add from a buy because of the earnings. Remember, the stock, if you look at the Q for material costs, it saw a sharp jump. It came in at around 940 crore rupees as against 880 crore rupees on a year-on-year basis. And a quarter-on-quarter basis also, there is a 40 crore jump in the material cost. So because of the material cost, you have the PAT that saw a hit, and because of that, the stock is down as well as brokerages are cutting recommendation.
Let's move on to the next stock. And Sameet, IndusInd Bank is the stock that you've picked out for us today from the private bank. What should we be expecting in terms of targets here?
This has been one of the rank outperformers in the recent past within the private banking name. Stock has already confirmed a breakout from its multi-month resistance of 1270, 1280. And from here on, the next levels to watch out for would be around 1340. That would be an immediate target to watch out for. But if you have to take a slightly broader view, we expect this stock even heading towards say 1400 plus levels. So overall, the bias remains positive. The structure is quite sturdy, and since the stock has already given sharp rally in the recent past, some sort of profit booking or time-wise consolidation cannot be ruled out. But any price-wise decline, say towards 1250, 1200, would be a good buying opportunity, and we expect this outperformance to continue from IndusInd Bank. And yes, 1350, 1400 levels clearly on cards.
All right, that's the take coming in on IndusInd Bank. Harsh, Ahluwalia contract, why is this one in news?
Well, strong set of numbers, Cheryl. What we're looking at in terms of revenue is a solid 18% expansion on a year-on-year basis, and a large part of that in Q4. So on a sequential basis, revenues are actually up 16%, and that's been the performance across the board. So I'll break that down even further. EBITDA has come in at 110 crore, which is a solid 74% uptick on a year-on-year basis, but a large part of that, again, 55% uptick when I'm looking at it just sequentially. So a large part of that uptick coming in Q4 of this particular year. We're also looking at solid margin expansion. Margins which are at 8.7% in Q4 FY22 have come in at 9.6% in Q3 of FY23, came in at 12.5+% in Q4. So again, you can see that traction coming through in Q4 in terms of the numbers, and profit after tax also rising a solid 60% on a sequential basis, 71.5% on a year-on-year basis. So what we're seeing is a strong push for profitability on the back of strong margins in Q4 of this particular year, and on the back of that, the stock is up and away in trade today.
Absolutely up and away in trade today. That's Ahluwalia Contractors up more than 12%. Moving on to the next one, and Greaves Cotton, Ashesha. Why have you picked out this one for us today?
This counter is also under acute pressure today after one of company's material subsidiary has failed to comply with FAME guidelines. The company has said that Ministry of Heavy Industries has alleged that Greaves Electric Mobility Private Limited, which is a material wholly owned subsidiary of Greaves Cotton, has failed to adhere to phased manufacturing program guidelines, and they have also proposed to deregister it from FAME India scheme phase 2. Ministry of Heavy Industries has also said that the company will have to deposit all the incentive that the company has received till date, which translates to about 124 crores along with accrued interest to the Ministry of Heavy Industries. So on the back of this notification that has come in, the stock is under pressure today. As we speak, it is down over 9%.
All right, moving on then. Sameet, another bank that you're tracking for us, a private bank, that is RBL Bank. How is this one looking in the charts?
Stock is, one of the underperforming stock within the banking space, but recently, this stock has a tendency to give some sort of a rebound from the, whenever it reaches its 200-day simple moving average. In fact, if you take a glance at the, slightly broader, time frame, stock has already given a rebound from precisely from 200-day simple moving average nearly 7 to 8 times. So, last week it has managed to found its support around 140, which again coincide with the 200-day average. It has formed a Japanese candlestick pattern, which is known as bullish hammer pattern, and this pattern has been activated, and we expect this bullish momentum to continue in this counter. Next level to watch out for would be around 160, but once the stock surpasses 160, it would unfold the next leg of the rally, and then probably 170, 175 levels cannot be ruled out. So overall, we are upbeat, and we are hopeful that this stock would confirm a breakout beyond 160 quite soon.
Okay, keeping an eye out on RBL Bank. Let's move on and talk about Greenlam. This one too is in focus on the back of its numbers. When you look at the Q4 numbers, revenues are up by almost 15%, coming in at 534 crores. Net profit seeing a sharp jump of around 76%, 46 crores versus 26 crores last year. EBITDA also seeing a strong growth of around 51%, while margins, we are seeing an expansion of around 300 basis points, 13.9% versus 10.6%. Lower raw material cost obviously is one of the factors that has aided the margins of the company. And look at Greenlam Industries today, trading with gains of almost 15% as of now.
All right, let's shift focus. Let's talk about healthcare global, and that particular counter is buzzing in today's trading session. It informed the exchanges that they are evaluating greenfield and brownfield opportunities in the state of Madhya Pradesh. And not just that, they're considering increasing their interest in HCG, NCHRI oncology, also considering a potential inorganic restructuring of their operations in Nagpur. So multiple triggers hoping for a growth ahead for this particular counter. And as you can see on your screen, 3.3% uptake coming in for healthcare global as we speak.
Okay. Let's move on to the next one. And Sameet, the JK Cement is the stock that you've picked out for us. When you look at it in the last 6 months, the move has been quite subdued. Do you think finally it's going to pick up pace from here on? What are your targets that you're keeping for this one?
See, this stock seems to have cemented its position around 2700, 2800, which is a cluster of two important moving averages, 200-day SMA and 89 exponential moving average. So it has already formed a good base, and in last 3 days we have seen good buying interest in this counter. So it is now challenging its recent hurdles of 3100. So once 3100 is crossed, we can see a breakout confirming in this counter on the daily time frame chart, and then probably this stock can head towards 3250, 3300. So overall, as of now, the prices looks quite encouraging, and from here on, once this stock surpasses and sustains beyond 3100, then this stock is likely to head towards 3250, 3300. So overall, the chart structure looks quite promising, and as far as support is concerned, 2900 seems to have very strong support, and till the time it maintains its position beyond it, there is no real reason to worry for.
All right, moving on, Harsh, let's talk about KDDL and why this one is in focus today.
Results, Cheryl, what we're seeing largely is that sequentially the results have come in slightly poor, and on the back of that you can see some pressure on the stock right off the bat. You're seeing revenue which is down 4.5% on a sequential basis, even though on a year-on-year basis there has been progress, 30% higher on year-on-year basis. What we're also witnessing is EBITDA has come off quite sharply, 25% lower on that EBITDA number, 56 crore number in Q3 of FY23. It's come in at just 42 crore in Q4. So you're clearly seeing pressure on the margins front for the company, and what we're therefore seeing is EBITDA margins have fallen from around 18% all the way down to 14%. That 400 basis point reduction in EBITDA is keeping the pressure on the stock. What we're also therefore seeing is profits are lower by 31% on a sequential basis. They've come down from the 31 crore mark all the way to 21 crore. And on the back of that, there's pressure on the stock, down around 4% in trade.
Okay, let's move on, keep it to the earnings, because Balkrishna Industries, surely Ashesha, is falling in trade after the numbers. What is the breakdown of the numbers? What has impacted the Q4?
Clearly weak set of numbers, and that is what the stock is reacting to. In fact, it is sitting with a cut of nearly 7.5% as we speak. Revenue saw a dip of about 2.5%. They came in at 2,317 crores in the quarter gone by. Margins have also been impacted this quarter. Company reported margins at 20.7%. versus 21.2% that the company reported same time last year. So on a year-on-year basis, it is a dip of about 50 basis points. Higher other expenses offset lower freight costs that the company enjoyed, and hence margins have contracted despite lower freight costs that the company enjoyed in the quarter gone by. Apart from this, they've also spoken about their capex plans for the coming years, where they said that advanced carbon black project of about 30,000 MTPA at Bhuj is now expected to be completed in the second half of FY24. They also said that brownfield tire project in Aurangabad has been completed, and full ramp-up of production is expected to reach, the company is expected to reach full ramp-up of production within a period of next 6 months. A largely weak set of numbers, and that is the reason the stock is declining nearly 7.5% as we speak.
All right, moving on. Sameet, let's talk about JM Financial. How is this one looking on the charts to you?
This stock, has undergone a good time-wise correction in the recent past, and before that, it has already completed its retracement price-wise correction. Importantly, in the recent, rally that has happened from the levels of 60 towards 72 now, it has come from, a good volume. So overall, the volumes have picked up substantially, and on Friday, we saw a good surge in this counter, which confirmed a breakout from its, recent levels of 68. Although today, stock is a bit muted, we expect, buying to emerge at lower levels. So today's, consolidation or a minor profit booking can be construed as a good buying opportunity. We expect this stock heading towards 80 over the next, couple of weeks time. And on the low side, as a trader, one can keep a stop around 66.2, and one can go long at current level.
Let's move on and talk about restaurants brand Asia, or Burger King as we previously knew it as. Now, according to ET reports, what has come in is that PE funds have General Atlantic as well as Advent International are closing in on the Burger King stake sale. Now, PE Everstone has 40.9% stake in restaurant brand Asia, as well as Everstone is actively engaged in due diligence with PE firm Everstone, which operates Subway as well as Lavazza coffee chain in India. Now, growth in Western food is also slowed down a bit. So how does that work out is something that we're keeping an eye out on. But yes, according to ET reports, this is the news for coming in. Keep an eye out on restaurants brand.
All right, let's shift focus and let's talk about Gravita India. And why is this one in focus? Because it saw a huge block deal take place during the pre-open block deal window. So you had 32 lakh shares that changed hands via block deal, and if you translate it, it comes to 4.6% of equity. On back of that, the stock has seen a good jump. Now it's trading higher by about 2.3%. It is the third day of gains coming in for this particular counter. However, the buyer and the sellers of this block deal is yet to be known. But Gravita India buzzing on back of the huge block deal that took place today.
Okay, Sameet, you've picked out one more bank for us, and this time it's a public sector bank, and that is SBI. What are the charts indicating for this one? What is the run-up that we should be expecting now from SBI?
See, this banking giant clearly, remained muted in the recent rally that, we witnessed in the market. But, with Bank Nifty hitting its all-time high, this stock seems to have come out its slumber phase. Stock has confirmed a breakout from recent level of 590, and from here on we would expect some catch-up rally in this counter now. So next levels to watch out for would be around 610, 620, and if Bank Nifty has to move towards 45,000, we expect State Bank to now start participating in this rally. So overall, the bias remains positive, and on the low side now, 580, 585 would act as a very strong support. So.
All right, moving on, Harsh, Lumax, why is this one in focus?
Back of results, Cheryl, what we're seeing therefore is revenue has gone up by around 11% on a year-on-year basis. It's gone up to around 608 crore from that 550 crore number same time last year. EBITDA margins have actually contracted, and EBITDA is in fact down 16% over the year gone by. We've seen EBITDA at 58 crore in Q4 FY22. It's come in at 49 crore in this particular quarter of this year. So what we've seen Q4, a contraction in EBITDA by around 16%, margins therefore declining from that 10.5+% mark all the way down to 8%. Larger RM costs, which is raw material costs, employee costs and taxes, seem to have dragged the bottom line numbers as well. So all the way to the bottom line, we've seen a decline of 28% on profit after tax on a year-on-year basis. From the 29 crore number, it's come down all the way to 21 crore. So definitely a pushback for Lumax. They've declared a dividend of 27 rupees a share, so that's possibly a positive. But other than that, you're seeing the stock which is down 6.5+% in trade. They've also shut down their factory in Gurugram on the back of lower capacity utilization happening there, just from an efficiency standpoint. Largely, that's the reason why Lumax is in focus.
Okay, let's move on and talk about ONGC on the back of its numbers, Ashesha.
ONGC, but even if we strip that off, the numbers were weaker than what the street was working with. Revenues have fallen this quarter. They've come in at about 36,293 crores, which is a downtick of 6% on a year-on-year basis. Despite largely flat crude oil prices that we saw in the quarter gone by, revenues have dropped by about 6%, and that is on account of lower volumes in the fourth quarter. Crude and gas production volumes dropped by about 3% and 2.5% sequentially, and crude realizations also declined by about 2% on a quarter-on-quarter basis. As far as margins are concerned, they've also contracted by about 800 basis points. Company reported margins at 45% versus 53% that the company reported same time last year. As far as the bottom line is concerned, the company in fact has reported a loss this quarter of 248 crores versus a profit of 11,000 crores that the company reported same time last year. There are some one-off adjustments, and hence the company has reported a loss, but largely below what the street was working with, and that is the reason the stock is declining in trade today.
All right, so that's the take coming in on ONGC. But on that note, we slip into a break on this edition of Market Fatafat. Stay tuned, more on the other side, don't go anywhere.